So welcome everyone to the first webinar in our series dedicated to scaling growth, brought to you by Service Rocket. My name is Sam Miller, and on behalf of all of my fellow Rocketeers, thanks for joining. With that said, let's have some fun when we learn about telltale signs that your company has outgrown its financial tools. There are always things in the market putting pressure on your company, whether that be banking uncertainty, high inflation, Feds are raising interest rates. This really creates a lot of uncertainty into the market. The more uncertainty in the market, the more volatility in your business. CFOs feel the same way, apparently. From a survey of CFOs done in November 2022, 99% of them predict budget cuts in hiring and retention. Really, all that boils down to is leaders having to do more with less. But your teams are already working harder than ever. Across industries, we see companies struggling with unnecessary delays, like the shop floor manager swore we had enough timber material for the Guitar Center order, but of course we don't, and no one knows when the next shipment is due. Financial management issues. For instance, we forecast 35% more revenue this year, and now we can't meet payroll. Do we have enough in savings to cover? Cross-department collaboration issues. The office has no idea what the shop floor is producing, the wrong part for the Johnson & Johnson order. Regardless of external factors of the market, the most successful companies find a way to grow and thrive. Technology is a big part of that solution. And with technology, you really need to ask yourself, how do you get the most out of the technology you're already using and to improve efficiencies and to drive productivity? And how do you know when it's time to invest in new technology? Don't worry, we got your back. After a few short introductions, we'll dive into the importance of finance tools for your company's growth, followed by the signs that your company has outgrown its financial tools, along with their negative impact on your business. And then we'll wrap things up with a review of some of the powerful financial tools that will not only solve those challenges, but create a foundation for your company to efficiently scale in the future. Everybody ready?
Ready.
Let's do it.
So for our guest speakers, ladies and gentlemen, we are in the presence of financial experts, and I'm especially appreciative of their time. So thank you so very much. First up, it gives me great pleasure to introduce one of our newest Rocketeers, Chief Financial Officer, Joy Manugo.
Morning.
Yeah. Joy has more than 19 years of experience in finance, including audit, tax, business operations, financial services, capital markets, and treasury. She has worked for Ernst & Young, BlackRock, and Google, where she provided executives and business leaders with clear insights into drivers of business performance and advised them on how to go public. Welcome, Joy, and say hi to your adoring fans.
Hello, hello.
I love that. Our second guest speaker is financial expert in her own right. Let's give a warm welcome to Director of Sales Enablement at Rowe, Tammy Bean.
Hello. Thanks for having me, Sam.
Thanks for being here. Tammy is an experienced financial business leader with a strong background in sales, accounting, operations, and business ownership. She has 11 years in the payments industry, specializing in sales, business development, and client success. Prior to payments, though, Tammy spent 15 plus years in recruiting and staffing. And for over 20 years, she has worked closely with CFOs of middle market companies, helping them with the right tools and talent to fuel their company growth. Tammy has held leadership roles as a director of business development at American Express and the president and business owner at Acknowledge Financial Staffing. Thank you, ladies, so much for joining us. And honestly, just from being here, I feel financially savvy. And that leaves me, your host for the Scaling Growth webinar. My name is Sam Miller, and I'm the product marketing manager for our emerging partners here at Service Rocket. And as a PMM, I have my hands in a lot of strategy work, but my superpower is engaging with customers and really digging in to find opportunities to enable their growth and create value for them and their customers alike. Service Rocket is a leading tech-enabled services company that accelerates the growth of software companies and their customers. By maximizing software adoption and return on investment, Service Rocket provides an ecosystem of capabilities that span software implementation, adoption, retention, and expansion. A trusted partner of NetSuite by Oracle, Atlassian, Workplace from Meta, Moreau, Thought Industries, and Rowe. We offer both managed and professional services that cover pre-sales, onboarding, support, education, customer success, license resale, consulting, admin and support, training, and apps building. Oof, that's a mouthful. Our diverse workforce of Rocketeers enables a follow the sun sales and service organization that drives the growth of 5,000 plus customers globally in Australia, Canada, Chile, India, Malaysia, Philippines, the UK, and the US. So with that out the way, before we dive into things, I just want to talk about why financial tools are important for business. Now, on a high level, they give us a way to measure the financial health of a company, like the heart rate of your business. So for instance, better financial management is the foundation for better decisions, such as when to invest in new projects, when to cut costs, or to seek additional funding. Then there's improved forecasting. Forecasting future financial performance isn't an exact science, but it enables companies to plan their budgets better and make strategic decisions with greater accuracy and confidence, which is closely followed by risk management. Financial management tools enable leaders to take proactive steps that reduce risk and protect their financial stability going forward. And finally, compliance. Finance tools ensure that the business is operating within the law and is transparent about its financial performance, and especially their reporting. Overall, financial tools are critical for businesses to manage their financial resources effectively, make informed decisions, and do more with less. With that base knowledge, let's get into what you really all came for, the signs that your company is outgrowing your financial tools. It's critical to be able to recognize these signs, as they can prevent a company from achieving its growth potential. But this is not an exhaustive list, and these are a few signs that are easy to spot. First one is unnecessary delay issues, followed by financial management issues and cross-department collaboration issues. To get started, let's dive into unnecessary delay issues. We've all suffered through these examples one time or another. For instance, wasting time trying to find file X. If it were readily available and easy to find, that would drive efficiency. Or the very common inaccurate inventory and supply data. It can be frustrating to work so hard to manufacture a beautiful piano, only to have it stop midway because you're missing a critical piece. And lastly, when month-end close takes an extra 3 weeks because of all the corrections that need to be made to the general ledger. Most don't realize that these are solvable issues because most don't know any better, and that's just how things have always been done. But these signs take a toll on their business. For instance, if you don't have control of your processes or expenses, employees start to cut corners to finish their work on time and on budget, which can lead to a lower quality of work, errors, and poor customer experience, unfortunately. Or not having access to real-time data can have a huge negative impact, because as a company, you need to have a strong understanding of your expenses. As you scale, the internal processes that got you to this point can begin to break down, like manually keeping transactions organized, like sales, returns, debits, credits, etc. Manually processing this information reduces your productivity, which takes your people away from doing strategic work. Joy, Tammy, have you encountered any of these issues in your past before?
Sam, yes, definitely. So with my experience, both as an accountant myself and working with CFOs, I see lots of use case scenarios where the teams are spending hours every month chasing documentation and receipts. They don't have visibility into like the real-time spend, long delays, month-end close, exactly what you described. Most of this comes from companies that don't have the right technology in place and really don't know that there's a better way out there. And so they're spending time, I've gone into companies where they're literally like downloading an Excel file out of their bank or their corporate card program at the end of the month, manually putting in each of those transactions, and which is delaying the month-end close, and entering basically expense statements by hand into the accounting system. So we come across companies like that all the time that have outgrown their processes and their technology because that's just the way that they've always done it, and it's really holding them back. It's super inefficient and time consuming, and so they just aren't aware of the options out there to help solve for this. So excited today to talk about like Row and NetSuite together and how they can, be super impactful in helping companies grow and scale from a technology perspective.
Yeah, that makes a lot of sense. And you can tell Joy agrees with you, because as you were saying that, she was like, yep. Oh, no, can't do that. That was some great examples. I actually found another one during my research for this webinar. I found a case study of a company that suffered from unnecessary delay issues and was able to overcome them. I'm not sure if you've ever heard of them, but Lovesac, they're a furniture manufacturing company that grew from a garage startup to become a furniture designer, manufacturer, and retailer. As their sales grew, their outdated Microsoft legacy environment was hindering their ability to scale because of a lack of control in processes and poor visibility into their inventory. Lovesac wanted a cloud-based solution that would deliver a single view of all their customers, their orders, and inventory data, and so they can create an omni-channel experience across in-store, online, and their call center. After migrating to NetSuite, they optimized their inventory tracking and order management to almost eliminate all their stocking issues. All their customer-facing employees were able to get real-time visibility into their customer data, and they were able to offer a personalized shopping experience. Ultimately, they were able to unlock 50% year-over-year growth. I don't know about you, but that's a pretty great return on investment if I've ever heard of one.
Definitely.
Yeah. The second sign that you that outgrowing your financial tools is financial management issues. Now, these manifest itself in multiple ways, such as difficulty in consolidating financial data from multiple sources like banks, shipping centers, shipping partners, CRM tools, kind of similar to what you were just talking about, Tammy. Also, not being able to easily generate financial reporting, which is very important for companies to do on a regular basis, especially when it comes to reporting to their board or reporting financials to their bank, or honestly, really just because it's Wednesday. You need to have that information at any given time. Recognizing these signs is the first step to enabling your business growth, but if they aren't addressed, there are negative impacts in your company. For example, difficulty in making smart, informed decisions for the future. Without the most up-to-date business data, decisions being made are built on a foundation of playing cards. It can fall apart at any time. Additionally, your team's productivity suffers due to some cumbersome and error-prone ways of tracking finances manually. Joy, I remember when we were doing this run through, that was something you had experience with, right?
Yeah. So I had a conversation with the founder who had been I wouldn't even say manually tracking expenses. This particular founder was approving expenses manually, which is even more cumbersome. So before you even have a system, and they didn't have this company's not using NetSuite, and they don't have Row. So anytime, I would say as small as $250, and this is a well-funded private company, the CEO is tracking expenses. And so just think that that's taking away time from when the CEO could be making strategic decisions. And also hindering the finance team from also making important decisions. So the whole kind of system, if you think of it like a system or kind of like a wheel and parts are being, or even a printer press, like things rolling through, just imagine everything gets stopped or halted because someone has to make a decision to spend $250. I feel like if you have a tool like NetSuite and even Row, you can set rules, and Tammy will go into this. You can set rules on spend and, how much people can spend so that, if you are in, like you mentioned, Sam, in this tough economic times, really concerned about employee expenses or just expenses overall, because you're looking at the bottom line. Like CFOs, we really care about the bottom line, and we do care about expense management. It's better to have a tool to do that. And if you have to do more with less, why not automate it instead of waiting for one person to approve it? So that's just holding up the whole company and delaying any type of growth, which is super important in this economic environment.
Yeah, 100%. I agree with you completely. This actually makes a great transition to the next example that I found. It's a company called Keep. They had some similar challenges. For context, Keep is a fast-growing advertising and marketing SaaS provider that was able to scale was unable to scale with a dispersed collection of financial tools like QuickBooks, Excel, and their own internal software, which made creating financial reporting a challenge, to say the least. and also required a lot of manual work to move data around, which really hurt their productivity, like you just talked about. NetSuite's cloud ERP was selected over Microsoft Dynamics and Sage. And after a quick 3-month implementation and with some customization through a partner, they were able to enhance budgeting and planning, take more control of their travel expenses, and sped up financial reporting creation. Since implementing NetSuite, Keep has grown its revenue 300%, and then their employee counts have tripled in 5 years. And they were also able to consolidate software and services revenue into one report, which they were unable to do before. And finally, monthly financial close time dropped from 12 days to a day and a half. That's actually really impressive. That's a big chunk of time that you're saving for their entire finance team. The third and final issue that we're going to cover is cross-department collaboration issues. You can recognize these signs in your day-to-day when there's a avoidable duplication of efforts. For example, 2 departments may work on similar projects without realizing the other department is already working on it. I think we can all relate to this. Miscommunication, specifically between departments, because it can lead to misunderstanding and mistakes. Example of this that comes to mind is when sales interprets the instructions finance gives them on how to invoice a customer, which leads to errors in the final product or delivery service. Now, the negative impacts in your company are easier to see than the other ones. For instance, delays and duplication of efforts lead to increased costs as resources are wasted. Then there's the damage to your company's reputation. Dissatisfied customers may leave negative reviews or choose to do business with other competitors. Then there's the big one, lost revenue. Miscommunication and duplication of efforts can lead to errors in the final product or service, which causes delays in completing projects and takes resources away that should be focused on creating other opportunities for new business. Either of you ladies dealt with something similar situations in the past?
Yeah, I would say this is so cross collaboration from my standpoint. The first thing that pops to my mind is a cross collaboration between sales and finance. And so the sales team is very focused on revenue, which they should be. They're out thinking about pipeline, driving revenue, growing the business from a top line perspective. Finance, we care about revenue as well, right? We need the company to make money, but we also care about the bottom line. And so this is where I think finance and sales can come together and look at, pipeline and revenue and think about forecasting. But in addition to that, it's a great way for finance to bring some relevance and some awareness to sales and maybe even operations on expenses. So that's everything in between revenue, net income, and EBITDA, right? And so one of the things that I think NetSuite is good for is that you can create dashboards that show a whole host of information. Like I wake up every morning, I'm a little neurotic. So I wake up every morning, the first thing I do, I look at my dashboard, right? That I didn't create it. The team created it for me. So shout out to the team at Service Rocket who did that for me. But that helps me see revenue all the way down to EBITDA. And I could see, okay, well, here we're growing or we're not. And, here's where net income is or et cetera. And I think the other thing that's interesting to note is that Row can help with the integration for everything in between revenue and net income, right? Like we go back to that whole expense tracking, like expenses are so important. Again, I hate to just emphasize in this economic time, but what way can you increase margins? If you can't increase sales because companies are spending less on certain goods and services, the other way to increase margin is to reduce expenses. And one way to reduce expenses is to look at spend on technology and other stuff like that, rather than looking at places where companies are looking at payroll. So I think this is a great place for a great way or a great example of where Row and NetSuite are really powerful because you can just look at data real time. And that's super important for any CFO, controller, chief accounting officer, whomever in finance who wants to track expenses.
Yeah, Joy, just to add on to that, like from the expense perspective, that is the one piece that a CFO does not have visibility in when it's outside of their NetSuite environment. So that card spend. So the fact that it's giving you real-time visibility and able to sync like daily back into NetSuite gives you that real time on all expenses for your entire team. But yeah, definitely.
It's huge. That is huge.
That's great. Another great example. Ladies are knocking it out the park today. I don't have to do anything. I'm just going to leave. The last example I want to bring up today is of Pennside Partners, which is a part of Envision Pharma. They dealt with similar collaboration issues and were able to solve them with technology. For context, Pennside Partners is a business development consulting firm in the pharma, biotech, and med device space with offices in the US, UK, and Switzerland. They were actually losing money on projects because of a lack of control and visibility into the work being done, and there wasn't enough collaboration between departments. Their search for an employee resource planning tool ended with them choosing NetSuite. Because of that investment, they gained more visibility and control of their processes and costs, like Joy was just referencing, which enabled them to make better data-driven pricing decisions on which projects they actually took. They scaled their operations to manage 100 active projects efficiently and improve their client satisfaction and timesheet compliance to 95%. It sounds like they streamlined and became much more efficient as an organization, kind of like what you were just talking about, Joy, becoming lean and mean. So to help growing organizations overcome the challenges of outgrowing their existing financial tools, we strongly recommend implementing 2 financial tool solutions. First one being NetSuite by Oracle, second one being Row. NetSuite by Oracle is a cloud-based ERP platform that has helped businesses gain the visibility, control, and agility to build and grow successfully for 20 plus years. And Row is the complete suite of finance tools to help you work smarter, operate faster, and fuel your growth. NetSuite is the #1 ERP solution in the world. It's a suite of integrated cloud-based applications that at its core is a comprehensive financial management tool, but also includes functionality for each phase of your business growth, like enterprise resource planning, human resources, customer relationship management, or CRM, which most people know of, inventory and order management, e-commerce, project management, and more. Organizations in every part of the world choose NetSuite as the last ERP tool they will ever buy because it's regularly updated every 6 months to make improvements to increase productivity, enable collaboration, and simplify operational processes. NetSuite increases productivity and efficiency by integrating, automating, and simplifying all manual financial tasks so team members are free to better serve customers or strategic work. It enables collaboration by connecting system, teams, and operational data together to help leaders make informed decisions. And finally, NetSuite simplifies your operational processes like accounting and inventory tracking into one tool, which gives leaders visibility to identify new opportunities and outpace the competition. To summarize, it makes you and your team able to do more with less. As I mentioned earlier, we at Service Rocket are partners of NetSuite, and we offer 3 services for new and existing NetSuite customers: administration and support, development as a service, and consulting. We selected these services to ensure NetSuite customers can optimize their account and take advantage of real-time efficiencies that come with the tool. Think a one-stop shop for all admin, development, consulting, and integration needs. We strive to fit in as a part of your team as a growth partner and to give proactive guidance because when you grow, we grow. For our second solution recommendation, it gives me great pleasure to pass the lead back to Tammy so she can introduce you to Row, the complete suite of financial tools to help you work smarter, operate faster, and fuel growth.
Thanks, Sam. Appreciate it. So we've been talking a lot about the signs that companies see where it's evident that they've outgrown their existing financial tools. Basically they come to the realization that there has to be a better way, right, than the way that they're doing things today, their homegrown way. I'm thrilled to have the opportunity to tell you a little bit about Row and how we help companies scale and become more efficient with their finance departments. So Row, if you'll back up one slide, I'm sorry, Sam. Row is a technology company, and we're on a mission to make finance frictionless for companies. So we are a spend and cash management platform with no cost or fees associated with our platform. And we completely integrate with NetSuite, which is just a true difference maker. Okay, Sam, you can move on to the next slide. So in meeting with clients and CFOs, we find their finance departments and relationships look a little bit like this. They have many different vendors that are kind of siloed, solving one need for them. Lots of relationships, different logins, subscription costs, fees, not to mention different levels of service with each of these different relationships. So a typical company that I meet with Ro when we're first meeting, they may have an existing card relationship, right, for corporate cards. They may be banking with their local bank as well. They might be using Expensify or Concur for their expense management solution, and they might be paying a subscription for Bill.com to help automate the AP. So we find that, you know, with this, as I mentioned, lots of different costs, lots of different fees, lots of different logins, different levels of service. To say managing their finance needs in this type of scenario is clunky would be a huge understatement. So at Ro, we feel there's a better way. And that's what our technology does. Next slide, Sam, if you could. Yeah. So at Ro, we offer all of these under one platform, both cards, expense management, banking services, AP, treasury, all under one login and one platform. So think of it as one solution for all of your spend and cash management needs. In addition to that, as you can see, we integrate with 4 accounting softwares, NetSuite being one of our key integrations. Okay, Sam, next slide, please. Perfect. So companies use Ro to help them control costs, save time and money, and fuel their growth. Like that's the main reason they're coming to Ro. This is just a quick summary of some of our offerings. So we offer corporate cards with cash back up to 1.75 or extended terms, depending on what the business needs might be. No card fees to our corporate cards. Expense management solutions. So if you're, paying a subscription for an expense management solution that comes with our platform at no fee, gives you real-time visibility into your spend. Banking services, we have no fees for check, ACH, or wires. We help our companies generate a return for their idle cash through our treasury management solution, which is also part of the platform. We automate accounts payable, and we integrate completely with NetSuite. Next slide, Sam. Awesome. So let's talk a little bit more about this integration within NetSuite and what that means. So really, our accounting integrations are just saving accounting and finance departments like a ton of time each month by basically offering everything that's offered in the Ro platform is from a transaction level is able to be pre-mapped and point to the correct chart of accounts, GL, vendor, job codes, locations, whatever those NetSuite attributes we're able to map. So think of it like this: instead of manually, coding the transactions every month, as that time spend is happening in real time, and regardless of the payment method, whether it's card, check, ACH, or wire, all of this can be pre-mapped and synced to NetSuite daily. Okay, next slide, Sam. So to give you an example of how we've helped a customer in their business, this is KCON. They are a specialty contractor in Dallas-Fort Worth area, and they had 3 key challenges when we met with them. One was the complexity of the construction accounting, which a lot of data fields that they needed to capture through their job costing. Their current provider, they didn't have the capacity to truly spend the vendor spend with a limit, and they were seeking cash return versus their current program they had on points. They were getting points back. And then the big kicker for them was the amount of manual reconciliation of transactions. So they literally were pulling a bank feed from their bank and from their corporate card at the end of the month, and then manually manipulating all those data points and then pushing it to their ERP system. So that was the big savings for them. So not only was Row able to help them fuel their 120% year-over-year growth by moving to Row, we helped their finance team save 20+ hours each month on just the reconciliation. And they, I think earlier Sammy mentioned somebody, moving from a long month-end close to 1.5 days. They were actually able to close 2 times faster each month to give their leadership insights to how they were doing from a financial perspective. Okay, next slide, Sam. So basically, Row and NetSuite together, we're just better together. Think of it as an end-to-end automation solution. NetSuite really helps you with kind of that front end processes and automation, where Row gives you more of the helps you automate that spend and cash management from a transactional perspective. And then when together they can automate and bring together critical finance processes to help you fuel and grow your business.
All right, they are better together. And in conclusion, we hope this webinar has provided you with some valuable insights to on the impact your financial tools have on your business growth. Without the right tools in place, your company may struggle with unnecessary delay issues, financial management issues, cross-department collaboration issues, amongst many others, which lead to negative consequences like lower productivity, lost customers, and increased costs. Companies that are not aware of these challenges and actively working to address them will not find a way to overcome them and position themselves for success. By taking the time to learn and invest in your business's infrastructure, you will be able to do more with less. Thank you very much for your time, your patience, and participation in this webinar. We wish you continued growth and prosperity in your business journey. Thank you so much again, Joy and Tammy. And now we're going to open things up to questions.
Thank you.
Thanks, Sam.
One came in. All right. And what size customers use NetSuite in Row? I'll jump on the NetSuite side. Honestly, any size company. There's SMBs, SMEs, enterprise level companies that are all using NetSuite. What's great about NetSuite is it starts off with a core and like financial management. And as your company grows and scales, you can add more and more modules like HR, inventory, amongst others that you can add on to your instance to help scale your company's growth. And Tammy, what about Row?
Yeah, Sam, for Row, very similar. Row works with companies from startup, VC startup backed companies all the way. Really our sweet spot is all the way through like middle market space. So, I would say companies up to 500 million in revenue. We do have some enterprise level clients as well, but definitely most of our clients fall into that middle market space as well as startup. So we can grow with you.
Gotcha. So I heard NetSuite is another question that came in. I heard NetSuite is expensive. Are there payment options available? I know for NetSuite there's Oracle financing where you can break up the cost of NetSuite instead of it being a one-time upfront fee. It's either quarterly or monthly. And then I know also I heard recently there's a promotion going on where you can actually delay payments for your first 6 months of NetSuite. So that's pretty good for anyone who needs flexibility or need to get started and then start to see the benefits of the efficiencies and how much time you're saving. You can roll your return on your investment into actually paying for NetSuite. Is there anything else? What industries would benefit from using a tool like Row, Tammy?
Really, any industry can benefit from Row because of the scope of our offering, which is from if it's an industry where you're trying to track down expenses from employee management perspective, or if it's an industry where you have a lot of vendor spend and you're trying to automate, the payments out. I would say anything that, like this construction example I gave you, where it's pretty complex and you need certain data fields in real time, like those are ideal for us, saving a ton of time for our clients. But road services industries across the board, but I would say like we probably we do a lot in construction, healthcare, advertising, manufacturing, distribution.
Gotcha. I think we have one last question, and this one's this one's a common topic when it comes to ERP. How long does it take to implement NetSuite? The prevailing knowledge is if you want to lose your job as a CFO, to invest in setting up an ERP. That's the joke that I heard. I had no direct experience, but it could take anywhere from a regular ERP 18 to 36 months. Joy, would you say that's about right?
Yeah, so I went through a big transformation at another company and it took a while, but I would say give yourself at least 2 years.
Oh, wow. Okay. So what's great about NetSuite is there's typically around implementation, a simple implementation takes around 90 days, which is 3 months, which is much shorter than 2 years. And they're able to do that because of something that NetSuite created is called Suite Success, which is basically there's 30,000 plus companies using NetSuite in all different industries. And what NetSuite did is they took all the learnings and best practices and dashboards of the different industries, and they created them as modules or easy to set up instances of NetSuite that makes it easy for customers to get started quickly and easily. Like I said, 3 months, 3 months to 3 months is around the time that the time that I've seen and I've heard on multiple occasions. And then, sorry, one other question. Tammy, do you have to change banks to use Row?
Oh, that's a really good question. No, you do not have to change banks to use Row. The great thing about the Row platform is it's all encumbersome, but you can actually use whatever lever you need within your business. So if you already have a banking relationship where you have a line of credit and you need to keep that there, you could use us just for card, expense management, AP. We have clients that come over for banking and card that don't use something different for AP. So you can use each module, again, no cost to your discretion, but that's a great question.
Fantastic. That was the last question. Just for everyone who came to the webinar, thank you for coming. But we're also going to be sending out a recording of this, and you can go to our Service Rocket //NetSuite website and go to our blog, and you'll be able to watch this recording if you want to share this with someone later or catch it again because you missed something very, very important. Thank you, Joy, Tammy. I'm forever indebted to you. I appreciate all your support and all your help with this. Thank you so much. And thank you everyone else for joining. Have a great day and enjoy your Wednesday.
Thanks, Sam. Appreciate you.
Thank you. Thanks, Tammy. Bye.